Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, December the 7th, the year 2017. How many lines? As you know, no squigglies will be harmed in the making of this video. Only horizontal lines will be used. Now, that being said, people are going to want to know, well, how many horizontal lines? Well, how many do you need? 1, 2, 3, 4, 5, 10, 100, 1,000? Well, it depends on what you're trying to do. Well, of course, we're all trying to do the same thing, make money by executing profitable trades. But some horizontal lines might work a little bit better than others. Or you could use a random horizontal line and just trade what you see. The thing is, it's not that the horizontal lines work, it's that you as a trader work. Because I believe there was a question yesterday, somebody was asking something about where to put the stop loss and how do you know if you take profit at 2 pips or 40, something like that. Well, I've already done the stop loss videos. You see, to me, usually there's only a couple of places on the chart that make sense where you place a stop loss. If you want to say, well, here's where I should stop out. So, for example, on a daily chart, if you're trying to trade the breakout of the previous day's high, then the first place to put a stop loss, I think, would be at the top of the candle. So it would either be the previous day's high, open or close, whichever is higher. Once again, you're trading the breakout of yesterday's high, so you want to use the top of the candle, which would be whichever is greater, the daily open or daily close of the previous candle. Now, the second place I think to place a stop loss would be the midpoint of the previous day's candle. So if it goes back halfway, chances are you might stop out. Now, the third place to put it would be either the whatever's lesser, yesterday's open or close, or the previous day's open or close, or the previous day's low. Just depends. Now, if you're placing your stop loss at either of those locations, now you have to calculate your position size, because as traders, what we are doing is we're managing risk. That's what we're doing. We're managing risk. So we want to make sure as a manager that we're always risking the same, meaning when we have a loss, it's always the same, whether it's a $1 loss or it's a 1% loss or a $10 loss or a $100 loss. Doesn't matter. The loss has to be the same. Or it can't be, or it can't exceed a maximum. So if we're saying we're going to lose a maximum of $100 or 1% per trade, then if we cut out with a $50 loss, well, that because of something we decide we see on the chart, well, then that's okay. What's not okay is to have a $101 loss or a 1.10% loss. That's what's not okay. So when people ask these questions, they need to, as Tony Robbins would say, you need to ask a better question. And in this case is not where do we place it, but where the stop loss is because what we're doing is like, first is where does the risk tell us to place it? It's that simple. So remember, risk is what you are managing. And so you manage that by deciding what your stop loss is and adjusting your position size accordingly, or you determine your position size, and then that's where you place your stop loss. Okay, it's a simple equation. Just watch my stop loss video. Now, let's move on to how many lines. Well, here on the weekly chart, we can see I have 5 horizontal lines. The previous high, open, close, and low, and the current open. So on a weekly basis, if this is what I'm trading, these are the levels that I will take a trade when the price crosses. Now, I just noticed one thing. I had mentioned that we might also want to use the midpoint, not the show angle, but the show. Wait, this must be this one. Yes. Yeah. Period 1 bar ago. No. Must be this one. Yeah. My period 1 week, 1 bar ago. And we are going to show open, high, low, close. We can put the midpoint on there. We could also put the pivot if we wanted to. But for the purposes of this video, we're not talking pivots at this moment. So you see, there's the midpoint. So let's just say you were at the open, you wanted to go long because it gapped down. Well, if you're trading the week, you can see here, you would most likely put your stop loss here, and you would have been stopped out, which is perfect. In other words, that was your trading plan. You executed the plan perfectly. So it's not if you win or lose, it's whether or not you execute the plan perfectly. So in this case, that would have worked. So I hope you see that. Now let's shift over and look at the daily. So on the daily, let's say here's the open, and you wanted to execute the breakout here at the low. So once again, you would have triggered at 1780, and 1775 was the best. So in this case, you see it hit here, it paused. Let's bring it down. Let's look at it about on a 5-minute chart, because once again, people are asking, how do I know if I take the 2 pips or if I take 40 pips? Well, here's yesterday's low. Now, how would you know when to exit? Well, if you've been watching my videos, you know I talk about price turn. So you see here you've got a red candle followed by a green, and it already puts you in a loss. Now, here, where would you put your stop loss? Well, maybe you put your stop loss here. Okay? So, what would have happened? Well, you've got a red candle and a green followed by a red. Now right here, you're in profit because this is where you entered. So you see, you've got a red candle followed by a green, but here you've got a red candle followed by a green. So you see right there, that line made a lower low, higher low, took off, broke. Right here, this is an entry, but sometimes you can use these entry triggers as exits, because if you were flat, you'd be going long, but you're short. Your trigger told you to go long. So the market's telling you, get out. So in this case, you would have taken, what, maybe a 6 pip profit? No, 2 pip profit. 78 to 80. But right there on price action, it's telling you to exit. So this is when you take that little 2-pip profit. I mean, it's almost a perfect example. It's almost like somebody's going to say, "Hey, you paid that guy to ask you the question." No, I didn't. But it just so happens that it's perfect right here. Don't you love it when that happens? Now, once again, you go short here, and you can see here red followed by green. It breaks it, and you're like, well, it's not too bad. So once again, you come here. What do you have? You've got a red followed by it broke the top again. Now you have one more time, and so you've got a red, a green. It's breaking the top right there. Once again, now you've got a 1-pip profit, because if you didn't take that pip, it's boom, you're going to hit your stop loss maybe up here. And another thing, what you can see is these are making higher lows, not by much, but it's still making a higher low. So price is telling you, you know what, right here, we're going to push it up. So this is a perfect example where you take that 2-pip. You're doing price action. See, what happens is with traders is once you get into trade, for some strange reason, most traders, their mind switches into a different mode. I don't even know what mode it is. But you should be looking for your normal entry triggers along with thinking about taking profit. Because it's like with the buy zone that I said, when people kept saying, well, where's the stop? And I'm like, what do you mean, where's the stop? It's right there. What are you talking about a stop? If price goes against you and it triggers the other way, you're out of the trade. But it took me years to understand why people kept asking that question. Because to me, it was so obvious, I couldn't see what they were seeing. You know, it's not that I'm saying that, you know, I'm so smart or they're so dumb. No, I couldn't see what they were seeing, so I couldn't understand it because I was looking at it one way. I wasn't looking at it the way they were looking at it. And I don't know who or how I finally understood what people were asking and why they were asking. Okay, so let's just get that straight. I'm not downing anybody because somebody's going to watch the video and want to criticize me saying that, you know, my ego. And no, that's not it at all. I didn't understand. So, well, let's move on. So here we've got 5 horizontal lines. Okay, we've got our buy zone triggers. We got the open. Actually, there is a 6 horizontal line, the weekly open. And by the way, where I post my indicators, I posted this version of the buy zone that also has the weekly open in it. You know, I think I might even update it and put the monthly open just because. But I'm almost running out of time, so I don't want to have another one of those abrupt endings. So here we go. Horizontal lines, the rat zone. We've got our basically, in a way, we've only got 2, but just remember, these aren't, I call them trigger lines, but I should call them the last trigger, because you should be triggering somewhere in the zone. You shouldn't be waiting for price to hit there. Okay, just remember that. Here we've got the pivot lines. There's so many. You know, if you want to use the monthly and the weekly and the daily all on the same chart, or if you're using the daily only, you've got the mid pivots, etc. But once again, you just trade when the price crosses the horizontal line, and you trade with the candle color. Don't trade against it, especially the 1 hour. More pivots. Once again, we've got the wick zones. We've got basically 1, 2, 3, 4 horizontal lines that if you're in the zone, you come out, you go long. And once again, using price action, it will tell you when to exit. You know, every 10 pips we have horizontal lines, trading the price action. So fellow traders, as always, it's not what you trade, it's how you trade it. The Rumpled One, signing off to go drain the banks.